an exciting webinar here for you. We have new face in here, Joe Garcia, one of our top account executives, and he is going to be conducting and moderating a Ask the Experts, kind of an AMA sort of format, whereby so stick around for this after the market update, and we're gonna I think we're going through about 22 questions. Is that right, Joe and Ellie? Yeah. So a lot of questions came in, and
yeah, we got a ton of really good questions. Excited.
Yeah, super stoked by this. So I guess we'll get rolling here. And so it's February here, near the end of February, so almost spring. We'll get that in a second. Yeah, hello, I'm Scott Ebeling, Head of Energy Strategy and Client Solutions. And with me is Ellie Black, and she's the manager of the Pricing and Strategic Solutions team. Today we're going to talk about Box, do a little market update, and do the Ask the Experts Q&A, and then we'll have a few closing thoughts for you all. So we'll let Ellie take it away here, and she's going to talk about Box to all the newbies on the call, and might glean something new if you've been around here for a while. Go ahead, Ellie.
Awesome. Thank you, Scott. And thank you, everybody who decided to share some time on this Thursday morning with us. This is a little bit different, so thank you guys for coming in. And for those of you who submitted questions, really thank you. We're really excited to talk about that a little bit later on in the show. If you don't know Box, haven't worked with us before, or maybe just need a refresher, we are Box. We are Broker Online Exchange, an app direct company. So we provide independent energy brokers and affiliates and advisors with access to all top electricity and natural gas suppliers, instant pricing, and cutting-edge software, all supported by industry experts, as you can see on this call. Box has become the largest network of energy agents, brokers, and consulting firms in North America. Our connection of diverse energy partners all benefit from streamlined, efficient options in deregulated natural gas and electricity markets. You can see some of those markets here, where we have some natural gas markets in green, we have power and gas markets in blue, and then we have some that are kind of a darker gray color. Those are limited availability states. Some of the questions that we have, and we'll talk about all of this a little bit later, but some of the questions that we had were around these limited availability states. Deregulation everywhere is not created equal. Unfortunately, deregulation is a state-by-state effort. So every state, it works a little bit differently. For example, Texas, you'll see, is natural gas and electricity. Most people think, oh, it's electricity only, because you can't do anything with the residential or with smaller commercial customers. But if you have somebody who's rated industrial and taking from Atmos, and they're using, 50, 100,000 therms, that could be a good customer. So let's definitely get in touch with your account managers if you have opportunities in these markets, if you're interested in how to qualify customers in these markets. But bottom line, if you do have customers in these markets, we're really happy to take a look and see if we can source a supplier from our huge vetted network of supplier partners, which you'll see on the next slide, to fit your customer and to serve them. You'll probably see some names that you're familiar with on this sheet. Shell Energy and Constellation are huge brands. AEP is a huge brand. But you'll also see some, hopefully, that you might not be as familiar with, either because they're not necessarily located in your area, they haven't marketed to your area before, or because their preference is to work with channel first, which is really cool and something that definitely supports us and supports our business model. A fair amount of Broker Online Exchange's staff, Box, Scott, Benji, myself, have worked at these suppliers. We have great relationships with these guys. We've been in the industry for a while, so these are our friends, and we're happy to put those relationships to work for you to give your customer more options and to help you feel like you've got more to offer every individual customer. Talking about offering more, one of the best things about working with Box is that you have access to our strategic solutions team. So just gonna plug that real quick. We've had some awesome conversations and have been getting on the phones a lot more with app direct advisors and customers, and of course our Box brokers. I actually just talked to one of our oldest brokers the other day and had a really, really awesome strategic call with a huge customer in a limited market. So we are happy to actually hop on the phone, but the strategic solutions team is able to offer several benefits. And those benefits, Scott, on next slide. We provide data-driven insights, some tailored sales strategies, pricing optimizations, and reverse auction platform, aka a margin compression tool, just getting the best bid at that point in the market. Now, we can also advise on how and when to transact. We can advise on product structure. We can advise on contract terms and help you negotiate and optimize those contract terms so that they're bilateral and not just written to benefit the supplier. All of those things and pieces that we've learned from working in energy markets day in and day out are skills and resources that we are really truly looking to bring to you, looking to bring to your customers so that you can provide them a better level of service with more options and more confidence than before. If we can help with a customer, whether that's a big strategic customer or whether you're looking to get a little, just looking for creative options, that's always something that we're interested in talking about. Of course, we've got robust, a robust system and some options for small commercial as well. We've got the App Direct team and family and some of those guys offering more products and services and solutions than ever to sell. So if you guys have opportunities, we are absolutely here to support them. With that, Joe and I will be back a little bit later to go over some Q&A. We should have a lot of fun. But first, I will give it to Scott, and he can walk us through the market update and tell us what's going on.
Thank you, Ellie. Yes, our new term for the reverse auction, a margin compression tool. We heard one of our brokers, that's the way he described it, and that's the way he pitches it. It's just at the end of the process. We just use this tool, margin compression tool. So feel free to steal it. So let's go market update here. And first of all, yes, the big news since our last call. I think we were right on the cusp of it when we were having our call last time, but we had this major cold that came through. It's been kind of sustained for a good solid 2 weeks of time. And yes, this is a picture of the Chicago skyline along the lakefront. I didn't take the picture. Luckily, I was out of town for a lot of that during time, but it was really interesting. So anyway, so first of all, I want to look at this. This is the forecast here on January 20th. And this is what we showed last year. It's about the same time we had our webinar, right? So we saw this come on. This is the 8 to 14-day forecast. It's looking at the end of January to beginning of February. And we're already kind of in the midst of this already anyways, but this thing flipped, remember, on Martin Luther King weekend where we had this big polar vortex drop down and brought the cold weather. And then just for context, here we are today, and it looks like winter's over. Like, the groundhog was wrong again, and spring may be coming early, just like last year. But this is what the forecast now is for 8 to 14-day from here. So. But that's interesting because this is just what happened. This is now the market. So just want to kind of go into this and show you kind of some slides here. So here's some winter storm firm. Just want to continue going over this, so the impact this thing had. So this chart here compares January 16th versus January 29th, where the prices were. So the Feb contract, big move in gas from 310 in 13 days went to 746. We all saw that. We all saw those movements. But 27, 28, 29, not much movement. And we were trying to get this word out there because there was sort of a lot of customers and clients panicking a little bit, like they were seeing the news. And we were trying to tell them, like, hey, listen, your contract's not due till February 27. You're fine, right? Even if it was in July or June of 2026, it wasn't going to be a big deal. It was pretty much just in February, a little bit more March. But after that, it was kind of not really changing much. We call this kind of front month the CNBC price because that's the number that's on CNBC. That's what they love to talk about. CNBC loves to get the clicks, loves to get the viewers, get their attention, grabs them, keeps them there. That's what their purpose is. They're trying to market and get more viewers and more advertising dollars, right? So. That's a number that's blasted across the mainstream media. They're not going to talk about 2027 gas or where July gas is. And of course, they kept talking about how prices doubled, but oh wow, when February went out the board and they went to the March contract, pretty much price got cut in half. They didn't talk about that. Even though most large buyers are not purchasing a prompt month, and you know they're just creating this fear and urgency out there, and we saw that in the clients. And like I said, most disciplined buyers have already bought earlier and should have stayed focused on March and beyond. And this is where the market's moving much less than where they actually are. Each individual month is a different contract, and I just want to drill that in. And now just going back into another impact out if you're on index. Of course, you're paying a huge amount for gas and index, but also on the daily markets here. Here's each of the days in this major period where it really was hurting a lot. Yes, we had some days where the market cleared 850 in the PGM day ahead. I haven't seen it that high in years. So definitely some big record numbers. ERCOT was hitting some big numbers as well. ERCOT held up really well. Very similar conditions they had in Winter Storm Uri, but we didn't have the $10,000 prices at all. They made some big improvements. We've been talking about it a lot. It's really impressive what they've done over at ERCOT. So moving on here, yeah, we had a blog post on this whole thing, clarity amid market chaos. You can pull down the PDF on the webinar. You just look in there. You can just pull down the PDF of that in the handout section down there. The handouts arrow says handouts 1. Pull that out and get it. There's a link here to that blog post. Just click that link there. So going into some of the effects and some of the stuff here, look at PGM West Hub Historical Monthly Index. Yes, we've had a big January. We hear probably the bigger numbers we hit in a long time, like probably 4 or 5 years for PGM for a monthly. February's up there right now just because this is up through last week. The latter half of February is much more tame or clearing in the 40s. So this will probably averaging about 70 or 80 bucks in the end of it all for February. That's month to date, again, reminder. And again, ERCOT, we averaged around 81 for January, and nowhere near what we hit in Winter Storm Uri, by God. But we definitely popped out of where it's been hanging in that 30s. But now February we're back down there. So take what you may with that. And then NEPOL, the index in January averaged around 180. February's hitting up pretty high again too. That should average out as the weather kind of normalizes. But as always, New England is extremely high in the winter because it competes for natural gas with Europe in a way, because they're taking the LNG shipments in. That's the marginal thing of gas. Actually, what's on margin here, it's really interesting. What's been the main fuel in a lot of these days in NEPOL, a lot of these really cold days, is the main fuel that's on the margin and being used is heating oil. So it's oil. And as we discussed before, they got this biggest area on the Marshall's area of natural gas, within, afternoon's drive away. It's right there, and they block doing pipelines from there because of environmental reasons, but they burn heating oil when it's really cold out. And yeah, and they're getting gas anyways from LNG to burn their stuff. So that's going on there. I want to go to natural gas storage chart here. Yes, we had a big plunge. Those 3 weeks, and this came in today here. It's Thursday. It was just on a Wednesday, but the Thursday we pretty much hit that forecast there. But a couple things here. The 3 weeks, we had a 3-week level here. The last 3 weeks of storage, the highest 3-week level in history. So yeah, the sustained polar vortex really hit it. But I also want to point here on this chart. So yeah, we went from where we were well above for the 5-year average, all the 5 years, and last year, and kind of started plunging below. Now we're moderating out a little bit. We got a big comparison to last year where we actually had a slight injection. You'll see this on this purple line here, slight injection in March, which is a very rarity, apparently the first time ever. So we have that kind of projection. This is a forecast. If we just have normal weather, we're probably going to end up right around this 1700 area from normal weather. You see the forecast is up there a little bit nicely. So I'm saying we're going to go anywhere between 1800 probably. But what I want to point out is something here. No one else really does this. We forecast out where the storage reports that came out today, about 45 minutes ago, that's for numbers up till last Friday. So we make a prediction of where that's at. That's generally a pretty common prediction out there, and we can pretty much nail that pretty much. So, but we also make a forecast for the next 2 weeks based off where the weather is. No one else is putting on a chart like this. So it's a great value for customers to really kind of see what's going on. And these dotted lines here, this is in a way what the market is pricing in today. It's already pricing this in a way, especially the forecast coming out. So this is why, really the storage report that comes out, a lot of people are like, oh my God, storage report, don't let us hold off, let's wait for it. The market's already projecting that. What's really moving the market is the weather forecast coming in and is going to move this dotted line up and down here, right? So I just want to reiterate that, we actually do a big service here by putting out a forecast out here of where the markets are kind of like pricing this in at, where it's at, where it's coming in forward. The markets are not backward looking, they're forward looking. Excuse me, not backward looking, they're forward looking. They're looking forward to where expected storage is going to go for the end of the season, the next couple of weeks. They're not looking and seeing like reacting to like, oh wow, storage came in here. Yeah, it has a little blip here and there. Could be up 4 or 5 cents a little bit in the front month, not any of the back stuff. Just because of the just because of the little difference in where it came in and out, right? But it's going to be very slight compared to the forecast. Okay, I've spent enough time in this slide. My time is up. We got to keep going. But that's it. If any questions on that, let us know. But we do a big survey. It's big value. So feel free to send it off to your clients. So now just energy price update real quick. Yeah, amazing. All this stuff happened in the last month. Prices go up, 2027 price. No big movement here. Mid-Atlantic, New York, New England, big movements, decent movements in price compared to where gas is. Look at gas, up 1 cent in 2027. Despite all that polar vortex stuff, we're up 1 cent, right? So, but the power moved up, the heat rates moved up a little bit just because where LMPs cleared. That's normal stuff. And we'll move on here. Here's just historical charts. All of these are sent out weekly to you guys. You guys have access to this. We got it. One piece of news though for everybody is the PJM capacity just this past week extended the ceiling. So we extended the ceiling, extended the floor for 28 starting in, we already know where it's going through in May of 28. That's almost 2 years from now, but the next auction, 3.9 now. If there was a poly market on this or Kashi market, I bet you'd be 98% that it clears the ceiling because, hey, it cleared 530. It would have cleared 533 without the ceiling the last time, and we have a lot more demand that's expected to come on. But buyer beware, brokers beware, suppliers taking vastly different approaches to pricing beyond capacity in May 2028, which creates misleading comparisons and real risk in long-term agreements. Yes, we have quite a bit of suppliers out there who are pricing this at the floor, okay? For those capacity, if you're doing them in a fixed all-in contract, that's not fixed. Fixed price is not fixed. It's just really an estimate or where they want to put it at, and they're going to make adjustments on it. So we got to be very careful with that when talking to our clients. So again, any question on that? Just contact Ali or myself. Texas historical power. Yeah, these heat rates, the pricing is kind of like back down to these kind of levels here. We're kind of like here. We always have been saying here, we think the fair value with where the gas price is right now is in this mid-40 area. And we think it's going to continue going down that way. But without any big fireworks would happen in Winter Storm Uri, we took some risk premium out of the market there in Texas. New England keeps bidding higher here because it's just, structurally, it's kind of a nightmare with the fact that they don't have gas coming in there, and some of the heat rates where these things have cleared this winter. So continue on. Sorry if I'm talking so fast. You want to get through this, but let us know if you have any questions on this again. Demand growth. This is a chart we see every week. We put it out every week, but we also talk about this every month. This is a big chart to show customers and just kind of like talking about how the demand growth is growing in natural gas, which has implications for all the markets because gas is the marginal fuel that sets the prices. So big correlation between gas and power prices in ERCOT, New England, PJM, all those markets. So this is low, medium, high scenarios and where we see gas. So in a medium base scenario, baseline scenario here, we expect about a 22 BCF movement in about the next 4 years of increase in BCF gas. So A low case scenario is still 15. So take it what you want, but the low case is 15. And we need to increase production here from this 112 to 127 then, right? So we had a little drop here in January. That's just because the well freeze offs for like, a few days there where they couldn't, basically pump gas through the pipelines because of the cold, and but kind of gaining it back here. Real interesting here, this rig count starting to rise up here again. We were down here just almost 7 months ago, and it's around 100 still, and it started like kind of starting to go up here a little bit. They've going through some inventory, and they're showing that that they are expecting pricing to kind of like go up and be ready, and they're kind of ready for that. So again, flexibility by these producers is amazing right now, how they've adjusted in the last 5-6 years. And the last slide, I believe, last slide. I just want to show you this again. We showed this last month. We got a lot more people on the call here today. This is showing an example. This is a real example of a customer in PJM that we hedged out over the last 4 years, and just doing 12.5% purchases. And this is just to show you how this layered purchasing action works, okay? And again, so this is purchase one they had, and we do try to time these mostly in the spring, the fall. We sometimes move these up, but the spring, fall, purchase 2, purchase 3, purchase 4, 5, 6, 7, 8. You see them. Average purchasing layer was 49.44. Median daily price here is hedged out 2026 at any time, any period of time. You'd have paid 51.57 on average, and the big part here, though, is where we see a lot of customers, they wait till a month before, and they would have paid up here at these high levels. So what we're trying to say is to avoid, this, this, when we had all this the data center stuff really took off. This is all stuff that happened here back in Ukraine. So avoid all this, like, do I buy here? What do I do? And all that stuff, all that kind of like this stomach churning from that. You can just be on this plan here, like, okay, I'm gonna get this. I'm gonna get the buy at the right time. Yes, this is kind of a high purchase, but bought low here too. We're timing it right, and no one's gonna lose their job by going on a layered purchasing plan. So just wanted to reiterate that. And last slides here, some box market insights. Political pushback intensifies. Again, this is all in here. Read it up more, but really want to put on here. These are a couple of market insights we had in our weekly report put out. And main theme here in the political pushback and LNG growth is that, and we are going to be ripe to put this out here, insight piece on our website here, on a blog post here about really, we see a lot of political energy is become a big political issue, and it's not going to be voters saying like, oh, we need more energy for our AI so we can run our agentic agents are going to take our job. It's going to be more so about like, hey, our energy prices are rising, and could LNG be an issue in that in the future? Yes, but immediately after the data center side of it, definitely no worries there. In fact, here in my state, we just saw a government put a pause on incentives for data centers build out. So we're going to do tax incentives. So we're going to see this kind of stuff happening more and more. And lastly, gain competitive edge here at Box. Yes, we put weekly reports out. We have blog posts. We also help you with customer presentations for custom deals. Just let us know. This Box logo can be your logo. Just work with us. And now we'll move on. I'll catch my breath. Joe's going to take it over here. Joe and Ellie, it's all yours.
Awesome. Yeah, no, first off, I'm excited to be here today. So thank you guys for looping me in. And just my goal today is to represent our broker community. As an account manager, I've been at Box for 9+ years, working on 10. And I've had the privilege of working with partners across the organization. And so for many of you, whether I'm working with you directly now, I've had the opportunity to work with you in some capacity. And so today, my hope is that I can ask some of these questions that have been submitted with some conviction, because as an account manager, we get to walk with our brokers each and every day. And so that means two things. Number one, we get to celebrate the wins and we get to celebrate the big deals and all the success that our partners are having. But secondly, we also get to walk through the struggle with our partners. And so as we ask these questions today, hopefully we can bring some good insight and get it directly from the experts. So I know Scott and Allie are a huge asset to Box, and we're looking forward to asking some of these questions because we have some great ones. And so I'm ready to get started. Allie and Scott, as long as you guys are ready, these are all great questions. So okay, so we'll jump right in. Have a few questions here. So all great, like I said, but this first one I think is huge for partners that are just stepping into the industry. So something we hear all the time as account managers, especially again if you're new. But the question, Allie, I have this one for you. It is, I am new to energy. What are the most important questions to ask a potential energy client?
Oh my gosh, we're energy nerds over here, so literally all of the questions are good questions in our book. But obviously asking how much do you spend on your electricity every month is a great place to start. That's something that can tell you the approximate size of the business that you're dealing with, whether that is a very small business, a medium business that manages their costs well, a medium business that doesn't manage their costs well, and so on and so forth. Just how many zeros there. The other thing that you can ask is, who generally makes that decision? Is it the owner? Is it the facilities manager? Is it in operations? Due to the nature of energy contracts, this can run through purchasing. It can run, or it can just kind of live with the owner. So, finding out that information, and also, have you worked with a broker before? Have you worked with an advisor, a consultant, or have you just been shopping by yourself in the space? And just try to get a little information on how they've handled this before.
Awesome. I love it. Yeah, all great things to look for when you're working with a potential energy client. Scott, next question I have is for you. And this is a great question because if you're anything like me, I like to learn from the mistakes of others. And so this is a great question when it comes to consulting. But the question is, what procurement mistakes are you seeing brokers make in today's environment?
So when that question, I take it as more of like kind of what mistakes are we seeing brokers making on the procurement of energy. I mean, I think really, and I'll stick to my kind of like pertaining to mid to large size kind of customers here, and I think it's selling savings. They're selling savings and they're showing the price too soon in the process, and we see a lot of brokers who are like working with a kind of like a smaller kind of like matrix sort of customers, and when they start working with custom ones, they try to like do the same kind of quick transaction stuff, and these aren't quick transaction people. Some of these transactions can take like 1 to 3 months, and they play it all out and play the role in it, and the best way to do it is just sit there and be very consultative versus trying to be transactional right away. And showing pricing, but also showing savings, because these people know that necessary savings that can't be done versus what they're currently procured at, particularly the rising market.
Awesome. Yeah, no, I think it's important to know your customer type. And obviously as account managers, we can assist you with that and help direct as well to the strategic solutions team or those transactional deals that are matrix. So that's great.
100%. Joe, before we move on, I just wanted to highlight something that we do say is, listen, I don't know if I can, save you any money versus, what you're doing right now, particularly because I don't know how long ago you signed. What I can tell you is that I work with energy experts and that I can provide the best rate on the market for today. That we can do. We can help prevent you from potentially overpaying moving forward. That's real. So it's, it's not necessarily savings, but you do still offer a very, very tangible value.
Yeah, absolutely. Yeah, and that's so important too for our broker community, right? Like you are an asset to the customer. Like you bring value to that customer. So remembering that throughout the sales process is critical. So great feedback. All right, Ali, I got a couple questions for you, and this is we've been talking about this. It seems like for a long time now, and that is capacity. So, a couple of questions surrounding that, especially with PJM. But the question is, how do I know if it's good to recommend a capacity pass-through product?
Great question. And yeah, we've definitely talked about this a lot. Box is definitely of the mind that all large customers, definitely all the ones running through strategic solutions desk, should pass through capacity if at all possible. That is really the only way that you're going to get capacity fairly billed. Whenever you're passing it through, literally all that's happening is the grid operator has a calculation. They take the customer's values and apply it to that calculation, and they say this is the customer's obligation. There's not a lot of room in the calculation. We can provide approximate numbers so we know really what that's going to cost for the next year and a half, and can provide it for for energy budgets. There's really not a point in fixing it and throwing a premium on it if if we can't really, if there's not value to doing that. That said, we do understand that some customers prefer to have a fixed all-in price for budget purposes. And so for those reasons, again, we can provide those numbers and give it to you kind of and say, hey, this is what it's going to look like for the year, and kind of spread out over the load shape. This is what we would see on a, as a pass through, versus this is how the supplier has it included. And we can provide, we can do that either way. But particularly for larger customers, $1 million and up, passing through capacity in PJM is going to be the way. Potentially in New York and New England as well. I know you only mentioned PJM, but there's some opportunities in other ISOs as well.
Absolutely. So staying on that same track, and you might have answered some of this question as well, but one of the questions that was submitted on capacity is, as capacity continues to accelerate, especially in PJM, what key steps should brokers be taking to ensure reliability, market efficiency, and competitive pricing?
Passing it through. Yeah, that's really exactly what we were talking about, is just that we recommend passing through capacity to ensure that it's billed fairly. There's no additional premiums on it. It is also good to have a conversation about your customer, about capacity, what it is, where those charges are coming from, so that they understand that that is a grid regulated cost and not something that moves around the same way that energy prices do. We actually have a couple different market briefs that we've put together on demand-based costs versus consumption-based costs. And so if that type of thing is helpful, or if you guys, advisors and brokers out there, are wanting a little bit more information, either just training in general, and you want to talk with us and just make sure that what you're telling your customer is accurate and correct, or whether you want something to actually go to your customer with and show them and say, hey, here's the numbers, here's the values, here's all of the things that I can give you. Those are all things that we can help with as well.
Awesome. I love it. Yeah, and I know we've said it, but utilizing the strategic solutions team is huge. I know it's one thing that account managers are always pushing, and all of this information is available to our partners, and we can help you through this process. So not only can we answer questions like this today, but we can get you the information and data to back some of the decisions that you can make with your clients. So thank you for that, Ali. I appreciate it, and I know our partners do as well. Okay, so this next question we have, Scott, I'm gonna throw this one your way, but this is a huge question that we get all the time as account managers. Again, especially from new partners that are maybe just stepping into the industry, but also from partners that might find themselves kind of in a lull from month to month, right? And they're trying to drum up some new business. So the question is this, Scott, what's the best lead generation tactic? Things like social media, LinkedIn, versus cold calling and door knocking. So any tips you can provide here?
Yes, absolutely. So the number one thing I think people miss on this is, and if you're going to establish this is easier, right, is referrals. 40% of, they did a poll here, a bunch of energy brokers, one of the bigger kind of energy kind of like industry groups here that does like kind of like trade stuff here. They did a poll, like 44% of new business came from referrals. And all about referrals is all about the timing of it, right? You don't just like just call blindly and say referral. It's great to do, and we highly recommend is doing a first audit of the first bill they get from the suppliers, make sure everything looks up good, and you ask them and you give them great service, or anytime they say great service, you ask them like, hey, Joe, I really enjoy working with you. Were you as well? I want to find some more Joes to work with. Do you know any more Joes? And they will take that and typically will help you and try to find some more. And if they do, send them a little gift card or send them a bottle of their favorite wine or booze or whatever it is. Just treat them with something for that because of that client. But of course, people are starting out and other things. I find LinkedIn to be the best way. And the best way to do that is on LinkedIn is to go and in fact follow somebody named Samantha McKenna, McKenna. She's awesome. And she's going to help you with like really how to work LinkedIn best. And it's the best way to really where there's less kind of like because all other ways it's harder to get a hold of somebody. If you get a hold of somebody, the best way to do it is not to just go ahead and throw out there some stuff and people think you're going to look at it on LinkedIn and post stuff. People think it's like, oh, flock to you. They're not going to do it. And they're not just going to like take an email either. You just got to like follow them, make a comment on some post they did and do it. You got to be really meticulous about it, right? But really, if you're starting out, it depends on your style, how comfortable you are. Like going knocking on doors, especially on the smaller customers, that works, especially if you have the charisma to do that and the ability to be rejected and not take it too hard. That's great. But really, I think it's most important is like to pair things up because people are just going to hear your name. You want to get their name out. So if you send LinkedIn messages, you send voicemails, you send into a cold call, all those things can work, but you gotta like do them. So like for instance, I'm looking at some data. If I'm looking on a screen here, asking for a meeting time at the end of a cold call. This is some stuff from Gong. Some data just recently put out. Asking for a meeting time at the end of a cold call email has the lowest reply rate. Making an offer is the highest, but making an offer can be kind of like doing an audit, doing a benchmark kind of thing. But really, what I'm getting to on this is that when you're cold emailing executives, if you cold email, reply rate will double when paired with a cold call, and a cold email rate will triple when paired with a cold call and a voicemail. So pairing all those things together gets your name there, they might react to you. So, but you just gotta pound it, pound the pavement. You're comfortable with that? Do the cold call, do the emails, do the voicemails, do LinkedIn. Just really work at it, right? There's no real better lead generation just going at it yourself, but doing it smartly, doing it with data, keep changing things around. Sorry, kind of a long-winded answer there, but kind of something I'm passionate about.
Yeah, no, that's great, Scott. And I mean, obviously multiple methods and just touching base with customers is critical. So I think that's great. And just real quick, the one thing I would add from the account manager side is that you talked about retaining customers, Scott. And I think that's huge, right? It's easier to retain a customer than it is to get a new customer. And so, you talk about leads. Well, a lot of your leads are actually already in your current book of business. And now through App Direct, we have the opportunity to capture more of the customer's wallet share. So from the account manager side, I would just encourage those who are watching or listening today, get with your account manager and start looking for more opportunities to find more ways to upsell your customer and capture more of their wallet share through the different categories that we now offer, because those leads are sitting right there and it's already in your book. So that's all I got to add there. But next question, actually, I'm going to throw to Allie. Allie, how do we find businesses that do the right amount of volume of energy to obtain a lower energy cost? Also, how do we find the person that actually handles those energy decisions?
Yeah, absolutely. So one of the biggest indicators that a customer is a decent sized energy user, honestly, is square footage. And so if you're looking at a building and you're going, hey, you know what, they must have 100,000, 50,000, 100,000, 200,000 square feet right there. If you're looking at a warehouse, if you're looking at commercial real estate, if you're looking at even pickleball facilities and gyms, areas that have to be air conditioned, those types of things. I think square footage is probably the single best indicator of really what you're looking for. And second, obviously, is going to be the industry that the customer is involved in. Anybody who is actually making something or processing something on site, manufacturing, industrial, or anybody that has operations that need to run all year long, where they're pulling power because they have to, and making something and maintaining all of those all of their operations year round. That's really where you want to be. An example of that is like generally restaurants and restaurant groups, some franchise groups actually make for really great choice customers for natural gas, simply because that restaurant is using some gas for cooking as well as for heat. So they're not just a heat load customer, and that can get them better pricing. So the flatter the customer's load is, that's really the key. It's not so much about size, truly. Although if you do have a customer that's larger size, they may be able to, the number of product options that are available to the customer does increase with size. So that's that's definitely important as well. But yeah, I think looking at what type of operation it is and square footage are going to be two major indicators.
Awesome. Thank you, Allie. All right, so moving along here, we got a lot of questions. I want to make sure we get to as many as we can today. But Scott, this is a question, Scott, that we're all wondering, but this is a question we received from one of our partners. It says, I'm wondering where energy prices are expected to go.
Yeah. Okay. Yeah, we get that question a lot, and really, it's tough to answer that because we don't know for sure, right? I can just base off of, as going back, I'm a former trader, so I used to trade these markets, and everything I would trade is based off, we figure out the probabilities of stuff. We never were 100% sure that things would go up. We would put trades on and risk manage appropriately if we were 60, 70% confident in our probability that something would move a certain way. So I'll give a quick fire on this real quick. Gas prices, we expect those to continue to go higher. PGM, need pool, we're very neutral on those prices, and we think the heat rates are a little overcooked there. Although PGM, I'm starting to, with the capacity market changes here on the ceilings, we're kind of like shifting the focus on that and looking at it a little bit more. ERCOT, I believe, is slightly overpriced right now. But again, I am not extremely confident in any of those answers, and I wouldn't be placing any large trades in any of those if I was a trader. And to remind you guys all of our customers are short the market if they don't have a position. And so if their contract ends at the end of this year for 27 and beyond, they expect to stay in business. They are short the market, so they already have a position. So it's best to neutralize that position in the market, especially if you don't have any view that it's going to go much lower than here. So that's my answer there.
Absolutely. Awesome. Yeah, I think the most important thing, Scott, you mentioned is you have to have a strategy, right? Like there's a lot of uncertainty, and that's the importance of having a strategy with your clients. All right, next question, Scott. You touched on this a little bit in your market update, but this is a great follow-up question. So the question is this: what are the chances the utilities and governments make the large data centers pay for the additional cost of energy production and transmission, or will everyone have to pay the additional cost? Will this be a deciding factor on where or not these data centers are built in certain locations?
Yeah, great question. And the answer to that is that really for these large hyperscalers and the large data centers, they don't care really what the price of the energy is. They just care about getting access to the energy as quickly as possible. So I have been on calls with some of the large hyperscalers, okay, and where we've had some projects that we could present to them and of some certain areas. And the cost, the question of what the price is doesn't even come up. They don't care. So with that, I think governments are going to realize, like in Wisconsin recently it happened, governments are going to realize they don't necessarily have to put out incentives to them. They just have to get the access to one solid labor force for construction purposes, to access to connect to the grid. That's all they care about. And if that's all they care about, they don't mind if there's special tariffs or any of this stuff, especially if it makes it move faster. So I think there's going to be a shift in that mentality heavily over the next year.
Awesome. Thanks for that feedback. Alec, next question I have for you. You know, we're talking about even that last question, talking about large users, and a lot of times this is where this specifically comes up on like specific product types and different strategies. Which again, we've talked a lot about strategies and having certain positions with your clients. Question is this though: where can a broker go to learn about different energy products, not just fixed products? But learn about products and different strategies in a way that simplifies the concepts and makes them easier to understand and present to customers.
That's a great, well, to Bob's really. That's really what we really want to do, is give you guys those options. We've done some webinars in the past, just going over product structure. I think they're called deep dives on custom pricing, but that goes through, basically all of our components, even in markets like, capacity markets like PJM or New England, where you've got a lot of components working, and, potentially some unique little ancillaries. So we've done some of that. And like I mentioned, I think earlier on the call, we can also sit down and go through basically like consumption-based charges versus demand-based charges, and what's driving your capacity cost, transmission cost, in particular ancillaries, versus what the, what your energy usage, your line losses, and your RPS costs are, those types of things. So we're absolutely here to help. And if you, it's really simple. Just get in touch with us, get in touch with your account manager, and they'll throw something on our calendar. And again, that can be for you for your education, or it can be for you and your customer, just depending on what works best. We aren't necessarily, I think we may be putting together a website as well as part of the Box website, but keep in mind that we have My Service Cloud as well. And My Service Cloud has a page called Tools and Resources that we love, that is really it's educational resources. We've got some forward pricing going in there. We've got some trends. We've got basically different features that you can explore through that. We may have, and I think we may be adding some product information either there or somewhere else in the future. We'll definitely be pushing that out. But honestly, you want to know all of your options, get in touch with us, and we will all talk about it.
Yeah, love it. Love that you mentioned tools and resources. There's tons of resources in there that you can utilize with your customers. So encourage you to do that. If you don't know where it's at, contact your AM. They can point you in the right direction, but that's awesome. All right, Scott, I got a question for you. This is component based. And it says, can you explain what line losses are as a supply price component?
That's actually a great question, and it's a pretty simple answer. A lot of people don't understand what that is, and it's good to understand what this is when you're talking to customers. But line losses are really, so when electricity is going over wires, there's a lot of heat that's coming through those wires, and so with that, there's this power that gets kind of like through kind of that friction that gets lost. Think of like a wire, kind of like a narrow pipe, push electricity through it causes friction, and that warms the wire and kind of just wastes energy, right? So they kind of know what that loss is. So with that, they just customers need to pay for that, in a way, as like for what that loss will end up being. Now, certain transmission lines are higher, so different voltage levels of where it's coming in at. The higher your voltage level of your wire, the less losses, and so that's some customers, very large customers, will have like maybe half the line loss percentage that other customers would. So yeah, it's just basically power that's lost through the transmission lines while it's being transmitted.
Awesome, love it. Ali, next question. What is one element of current rate design you think could improve?
I love this question. I'm so happy that we got it. And I really thought about it a lot. Number one, whenever it comes to rate design, as we've talked about, there are definitely some of the SMB segment getting into kind of medium business where these customers are interested in more sophisticated products, and they may even be interested in altering their behavior to get to a better energy cost overall. the system that we have likes to treat everybody the same, and it likes to say, okay, we really overbuild everything so that we can be ready, so that we know that we have enough power, so that we know that we have more than enough power. We want more than enough so that everybody can use whatever they want all the time. But I think there's a significant and probably growing sector of customers that are willing to alter their behavior in order to see a better cost, rather than making the assumption, oh yeah, I'm happy to pay for, you know, all of that so that, you know, just so I can turn it on whenever I want. There's customers who are probably happy to alter their operations a little bit if that gives them a materially better price. So designing rates for those customers, either making additional rate classes to separate some of those really truly medium customers that could see a benefit from, you know, from additional products, you know, something for customers that are using, you know, $500,000 to maybe $1.5 million. That's still really considered in the supplier world, that's small. But those customers have significant cost and they're big enough that they deserve to have options. And the other thing is making additional customer classes for that kind of medium segment, and making additional customer classes around customers who are very interested in optimizing their behavior in order to optimize their cost. Giving customers who are willing to be flexible an option, and really rewarding customers who are you know, who follow through on that flexibility and who work with the utility rather than continuing to build. Not that we don't have to, just that customers who are willing to work with the grid deserve to be incentivized, deserve to, you know, they deserve to see lower costs because they're able to move and able to adjust.
Yeah, absolutely. Yeah, and so next question kind of along those same lines, right? Like talking about certain products that customers may be looking for. And we're going to go rapid fire now because we're approaching the hour. So we have some questions. I want to make sure we get there for our partners that submitted. But Scott, this next question is for you. So what is your pitch to customers on why they should be on a managed product, and what are the benefits, and are there any cons?
Discipline. Approach, no real cons. 80% of Fortune 500 companies are on this product. And the benefit for brokers and consultants is that every one of these customers that we have on here at Box on this, we just automatically renew. We haven't lost any of them. They automatically just renew out like 3-4 years out, because it's like time to add another hedge on every year. Like, hey, we got to start hedging now in 29. Let's do a 12.5% hedge. Boom, it's on there. Done. And it's a quick renewal. It's not even a question of do you want to renew, like, hey, it's time to add on.
Yeah, absolutely. Next question for you again, Scott. Why is it that pricing at times gets cheaper as the term gets longer, and other times it gets more expensive over time?
It just all depends on the curve in the market, right? Sometimes pricing gets much more higher up in the front of the market, and it's all based on fundamentals and future, where they expect future to go, right? So it can just fluctuate. That's called contango and backwardation, by the way. Backwardation means the pricing goes lower as the term goes on. Contango means pricing gets higher as the terms go out. So and it can just all depend.
Awesome. Allie, I'm going to throw you a few questions. So this one's around PTC. When the utilities PTC is beating, or price to compare is beating supplier offers, what specific market signals do you watch to know when the window to strike is opening again?
That's a great question. Okay, so PTCs and utility rates, any utility that's providing a default supply rate, that is basically backward. That's a backward rate. That's a rate that was locked at some point via the utility, and/or it's a real-time rate. So the difference between that and the supplier rates that you're looking at, that we have on the table, those supplier rates are all forward-looking. All of your utility, PTC, default supply, all of that is either going to be backward-looking or real-time. Now, whenever you're looking at forwards, there's some premium associated with price certainty, but basically what we tend to see is that utilities and LDCs work on about a 6 to 8 month lag. So if you're seeing really, really high supplier pricing and really, really low utility pricing, I would definitely recommend checking again in 6 months, because you may well see that reversed. That's not to say that you shouldn't go to that customer and say, hey, I'm going to fix you for a penny less than your peak cost, and market that as savings, because utility rates are going to continue to change. But you can definitely make a case as far as, hey, this is there's volatility here. Your cost, I don't know if you noticed, but your utility costs doubled during the season that you use the most power. So, help me, let me help you with that.
Yeah, awesome. Say, next one's for you as well, Allie. How can we best explain the difference between supply and delivery portion of the energy bill? And then how do we explain to customers that we are working on the supply side versus delivery?
Absolutely. So delivery is 100% regulated, and that is because basically you need one person to come out and fix poles and wires. There has to be one entity that is accountable for maintaining the service. It's not something where introducing competition would help. It's something that because we need to guarantee service. Those are regulated services, and they're all supported via our government's federal, local, state. So that's on the delivery side. And there's really all of that, again, very, very regulated through a mix of entities. Supply, like we mentioned earlier, is deregulated at the state level. So there's those pieces, basically your energy bill almost splits half and half between supply and delivery. And everything that lives on the supply side of the bill is something that we are able to help you with. If you want a bill breakdown and you want us to show you which pieces are associated with supply and which pieces are associated with delivery, reach out to us. We're happy to help.
Awesome. Scott, I'm going to throw these next couple of questions to you. So first question is, what are the most important factors that I should consider when determining the timing to renew a customer? And then does this change per market?
If the customer's ready to renew and they want to renew, I would just strike fire when you can, right? But it doesn't really change by market, but we really look at spring and fall, and we look at the window there, especially April to May 15th and Labor Day, December 1st through October 15th as definitely big windows. Although that's shifting down earlier. Last year, we were starting to hedge customers in August because we saw the pricing really dip down. We hit it right. And also last early March, we may hit the same kind of thing earlier. Certain markets, again, are forward looking, and they're starting to look more and more forward and really kind of like call winter when it's over and summer when it's over much quicker.
Awesome. And then I'll throw this one your way too. Do you think more long-term contracts, like up to 10 years, will become available on matrix pricing?
No.
Simple answer.
No. No, and I'll give the caveat to that why is because these are really not, they're managed to kind of really what's there, and it's harder to really judge what everything's gonna look like in 5 years. And these are very simple contracts, so they're not willing to take the risk. Suppliers aren't.
Awesome. All right, we got a couple more questions here. Allie, this one's for you. There are multiple new AI energy companies that offer services online, which pull your usage upon your consent and provide you pricing options from many suppliers for both home and business. Do you think this will ultimately replace the need for traditional advisors and consultants?
No, not really. I tend to think that humanity and technology tend to evolve together. While definitely, and I know that's a pretty common sentiment, right? AI is coming for all of our jobs. I think that there's definitely some opportunities for AI to come into the space, and I'm really excited to see what happens when we have AI in places where either the data has just been really complicated, and it's just been too much data for utilities or for associations to be able to really get their hands around everything that they need, or whether it's actually going out and lifting the administrative burden of working with all of the different utilities that you have to work with and things like that to be involved in the space. So I think that there are definitely going to be some positive impacts, and parts of that can be educational. Parts of that can be, I'm going to get you some better options. And part of that can be, yes, we can go out and, and shop, pull usage, those types of things. But I don't think an AI agent is necessarily going to be able to advocate for you the way that a professional would, the way that, Scott and I and our team would be able to. I don't think it's necessary. AI makes mistakes. I use my ChatGPT and a couple other models, devs, daily, and every time it's I'm asking it and we're working on it, and it's not, it's something that gets close, but it misses a lot of the nuance. And yes, that will continue to improve, but I think that our strategies, and again, the value that we are able to bring as human consultants will also continue to evolve. So I don't think we're getting replaced. I think there's a good place for both.
Absolutely. I think it's the advocacy part that that consultants can bring that AI necessarily can't. All right, a couple more questions so we can get to them real quick. Allie, one more for you, and then last question I want to ask you and Scott together. But this question is, the territory map for Box includes some states such as Montana and Colorado that have limited services that we can sell. In previous webinar, you said that some natural gas contracts might be possible. What are the qualifying criteria for that? And are there other services we can offer in the limited service areas?
Yeah, absolutely. So the best thing to do is to get a bill copy or two. In those limited areas, it's also very good to ask the customer, are you already with a retailer? Some customers are. Generally in those areas, we are looking for customers that are using 100,000 therms or more. Or 10,000 decatherms or more. There may be utility minimums up to 50,000 decatherms a year, or 500,000 therms a year. So those are gas markets, and customers really have to be of size. That said, like we talked about, some food processing, some manufacturing, industrial customers are all really good, really great customers to have. And we do have suppliers sourcing in those markets. Now, if we have a customer who is in a regulated market, we can't touch them, and they're too small for a transport agreement, and to help them optimize because they're using gas for production and it's a significant expense. If they're not big enough on the gas side, we may still be able to help them. The Tune device that does harmonics, reduces some noise, is available in regulated markets. We are also able to offer exact water. Those are available in regulated markets. And I believe we have some offers as far as other efficiency items, whether that's kind of, HVAC or LED controls. Getting into the efficiency side of things is something that will that you can sell basically in any market. Yeah.
Absolutely. That's great information for our partners looking in markets that aren't necessarily always available. So thank you for that. All right, so we finally made it. So last question here, we're going to fit it in right before the buzzer. Short answers on this one, both to Allie and Scott. Scott, I'll throw it your way first. What is the most important thing happening right now that most people are not paying attention to?
I'm going to give two quick answers to that. Chip efficiencies, for one, potential chip efficiencies going on out there, and also the global potential global LNG glut in about 3 or 4 years.
Awesome. Allie?
I was going to say just, kind of dangers of oversupply on gas, particularly for us here domestically. And then I think there's a big story just in terms of regional volatility. I think that we're moving from a place where we've seen a lot of, kind of national volatility and pricing moving in all ISOs together. And we're really seeing a trend towards more highly concentrated regional volatility. So that's the story I would watch for any individual customer.
Awesome. I love it. Well, we made it. The last thing I'll add on my portion is that obviously there was a lot of great questions. We started rapid fire here towards the end because of so much broker involvement and participation. So first off, thank you to every single partner and our whole Box community who submitted questions to us. And obviously, if we did not answer in depth or we need to go further in depth, your account managers are available to you, and so is Scott and Allie and the Strategic Solutions team. So don't hesitate to reach out. But I'll pass it back to Allie, I believe, or Scott, whoever wants to take it and wrap us up.
Yeah, I'll take it real quick. Thanks, Joe. Really appreciate everybody on this call. We appreciate business and working with you guys and giving great service to customers here. I want to finish up with this. We don't have to wait for our annual, Ask the Experts AMA to ask questions. Anytime, bring it to your account executives, bring it to the pricing desk. We are here. We are here to educate. We're here to make you better, make you improve, and lift all this up. So have a great day. Have a great month. Enjoy the rest of the winter and the start of spring, and we'll talk to you in March. And by the way, next webinar will be March 18th. We'll be getting some of that real shortly. I forgot I was going to put it on here, but we'll put it on real shortly. It'll be the link to sign up will be coming out within the next day or two. Take care, everybody. Thank you.
Thank you.